Well, hello and welcome to this Money Control live feed. You're watching Morning Trade with me, Nandita Khemka. It's a Tuesday morning and the cues coming out of the global markets are pretty muted this morning. SGX Nifty is trading above that 18,800 mark, but it is trading in the negative zone. Over the next 30 minutes, we'll be talking about the cues for trade, all the stocks in focus, including Indigo, HDFC AMC, IIFL Securities and the likes. And of course, we'll also be having all your stock-related queries addressed by our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we'll have them addressed by our experts. But before we do all that, let's take a look at the top headlines at this hour. Asian markets trade mixed as China cuts two more key lending rates as economic growth shows signs of stalling. The SGX Nifty is indicating a lower start for the Indian market. No cues from Wall Street this morning as the US markets were shut for a holiday last night. Indigo places a mega order for 500 airplanes, with Airbus taking its aircraft on order to almost 1,000 over the next decade. The order is the largest ever by an airline, and Indigo CEO Peter Albers says it takes care of the carrier's needs for the next 10 years and will double fleet size by the end of the decade. HDFC divests its stake in education loan subsidiary Credila, sells 90% of its total holding to Baring PE and ChrysCap for over 9,000 crore rupees. Meanwhile, sources say that the promoter of HDFC AMC will be selling its entire 10.2% stake in HDFC AMC today via block deals. And lots of other stocks in focus today. JB Chemicals will be in focus as Jefferies has initiated coverage on the stock with a buy rating. IIFL Securities is in the spotlight too as SEBI bans firm from onboarding new clients for 2 years. Prime Minister Modi, in fact, the next headline, Prime Minister Modi in fact, has taken off for a high-stakes visit to the United States. Big deals on the cards with the GE HAL fighter jet engine pact and Micron's $1 billion investment in India likely to be announced. Apart from meeting President Biden, the Prime Minister will also be addressing a Yoga Day event at the UN and will interact with select US CEOs and the Indian diaspora during his 4-day visit. Well, first let's get on board. Our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities, is joining in. Good morning, Sacchitanand. Good to have you on the show. Yesterday we saw, the bulls take a breather of sorts after a record close on Friday. What would you say? Do you say that, there's some bit of fatigue setting in after the kind of rally we've seen over the last few months?
Good morning, Nandita, and thank you for having me on the show. Most of the cues are on the negative side, but if you look at the trend performance of Nifty, it is still holding very well above its, 5-day exponential moving average. Even yesterday, we saw a bit of profit booking, but if you look at the overall broader market, when we look at Nifty 100 or Nifty small cap, 100, both, closed on a positive note. The pressure was clearly evident from the banking side, banking and financials. But if you look at even the Nifty bank performance, it is being more sideways since last 2 trading sessions. So it is still concealed within the trading range of its Thursday's price action. So I think the overall structure of the market still remains healthy. For the day, we may see some sideways range bound action, while the major trend for us still remains positive until unless 18,600, that particular level, holds on a closing basis. It has been trending very well above its 5-week exponential moving average, which is placed somewhere close to around 18,620. So until unless we don't see a closing below this particular level, I think the entire structure still remains buy on declines. And even today, if you look at the data, despite of the fact that Nifty Bank is somewhere close to its near-term support, it still needs a confident closing above 44,000, 44,400 to unlock that momentum. But when it comes to Nifty, I think, until unless we don't see slippages below that 18,600 mark, I think 18,700, 18,650 would be a decent level wherein some longs can be committed on the positive side. So net, we still remain positive. We don't see markets changing its course. After a good rally, there could be a breather which is evident since last couple of trading sessions. but the sector rotation has been really healthy. So the stance for the Nifty still remains positive.
All right.
From a trading perspective, for the day, we are expecting further slippages, but those slippages could be bought in. So we are expecting some demand at around 18,680, 18,700 kind of a cluster, and that's why we are still recommending building longs. The stop loss for the trade should be placed at around 18,605, and from a trading momentum perspective, I think 18,820 would be an important level.
All right, 18,820 important level to watch out for, and it's a good buy on declines market until and unless, of course, Nifty slips below that 18,600 level as well. Hold that thought, Sacchitanand. We'll come back to you and talk about specific stocks, but let me also bring on board our guest, on the fundamental side, Gautam Baid, who's the founder of Stellar Wealth Partners India Fund, is joining in. Good morning, Gautam. Good to have you on the show. My first question to you is, what are you making of the current leg of the rally? Would you call this the mother of all bull markets, given the fact that, we are firing on all cylinders, GDP above 7.2%, inflation below 5%, and stock markets are near record highs despite the fact that globally interest rates are perched at highest levels in 15 years or thereabouts. So, do you think this leg of the bull run is sustainable? I mean, what are your thoughts?
Good morning, Nandita, and thank you for having me on your show. Well, speaking of mother of all bull markets, India has been in the mother of all bull markets since the economic reforms of 1991. So, a new bull market is defined as when the index takes out its previous all-time high, and the Nifty is on the verge of taking out its previous all-time high. So, technically, that is when the new bull market will start. But the screen is clearly telling us that a renewed bull run has started in small cap and mid cap stocks. This is further backed by the strong corporate India commentary, which we got in the March quarter earnings. And a lot of companies have announced fresh capex. They're giving very strong growth guidance. And there are certain pockets within the market which are looking extremely bullish at the moment. In particular, the entire lending space of NBFCs, private sector banks, microfinance companies, affordable housing finance companies. That pocket is looking extremely strong at the moment. And along with that, capital goods, cables and wires, and hospital sector, along with the evergreen contract manufacturing theme stocks, they also look very, very promising.
Right, those are some of the themes. We'll talk about some stocks as well that you guys are buying, in your PMS. But, what is the sense you're getting from the FI community? Foreign investors have made a strong comeback after being sellers for months, do you think this trend is sustainable now that we are at the end, nearing the end of the rate hike cycle globally?
Right. So there are three big factors which determine FI's flows in the short term. One is the US dollar index. The second is the interest rate stance of the Federal Reserve. And the third is crude oil prices, because India, being a net importer of crude oil, is very vulnerable to crude oil price shocks. All these three factors are now playing in India's favor. So the dollar index has peaked off. The Federal Reserve is near the end of its interest rate tightening cycle, and crude has corrected significantly from its all-time high. So all the three big macro factors are in India's favor at the moment, and that is why India has become the preferred destination for foreign investors globally.
Right. You mentioned some of the themes like home improvement and stuff. Would you tell us which are the stocks looking good in the NBFC space and the home improvement space that you guys are in fact looking at as a PMS?
So, Nandita, when you want to participate in any sectoral bull market, you have to back the fastest growing names in that particular sector. So, in the microfinance space, for instance, ever since the RBI changed the regulations for the microfinance companies last year, the growth rate trajectory of all the leading companies in the sector has completely changed. And most leading players are growing at 30-40% on the top line. Regarding home improvement plays, instead of buying the real estate developers directly, we are participating in the residential real estate cycle revival through a leading paints company in the small cap space, which is the fastest growing listed paints company in India, Circa Paints. Full disclaimer, we own it in our India fund and in our PMS. And we are also owning the fastest growing laminates player in the listed space in India, Stylum Industries. So we are expressing our bullishness on the residential real estate cycle revival through this home improvement place, in addition to having exposure in a very fast growing affordable housing finance player.
Right. Let's talk about the kind of strategy one should adopt at the current juncture. In this bull run, what is the kind of strategy one should adopt if they want to be invested for the next 3 to 5 years? Say, what kind of a strategy one should look at? Should one go for a bottoms-up approach and look at quality companies, or should one take a top-down approach now? What would you advise investors to do?
The one strategy which I've observed over the last 16 years of investing in the Indian stock market, Nandita, is growth at a reasonable price is the only strategy that works across market cycles, across economic cycles, and across interest rate cycles. So this one strategy, if you adopt by having a bottom-up approach while keeping the sectoral tailwinds in mind, I think that's the route to success in the Indian stock market. And in addition to this, you have to emphasize two key factors when you're investing in India: emphasis on quality and prudent diversification, because abrupt regulatory and disruptive regulatory changes keep on happening from time to time. And the only defense we as investors have against an unknown future is quality businesses, quality managements, and a prudently diversified portfolio spread across various risk factors. We should never expose ourselves to single factor risk. This was a lesson which many investors in the US also got from November 2021 till end of 2022. During those 13 months, the Nasdaq fell more than 35%, and many technology stocks crashed 60-70% over a year's time. So when you're managing public money, always be spread across risk factors and across different sectors, and always focus on quality, because how much money you're able to recover after a bear market is over is much more important than how much paper profit you make during a bull market.
Right. Gautam, thanks a lot for taking out time and sharing your investment advice with us this morning. Look forward to having you again on the show sometime.
Thank you, Nandita.
Well, with that, let's go back to Sacchitanand and talk about specific stocks. Then, Sacchitanand, we've got details of some big deal that HDFC has in fact signed a definitive pact to sell 90% of its stake in its education loan arm, HDFC Credila, and Baring EQT and ChrysCap will be buying Credila for somewhere around 9,060 crore rupees or thereabouts. Now, Moneycontrol was the first one to break details about the deals on the 22nd of May, that Baring private equity led consortium is looking at buying out a stake in HDFC's Credila. Now, post acquisition, HDFC will hold somewhere around 10%, in fact less than 10% stake in its education loan arm. If you look at the HDFC and HDFC Bank duo, what are the kind of levels would you be expecting on these two charts now?
Well, Nandita, I think both the counters are trending near their 200-day exponential moving average. They are showing very similar structures. But if you look at HDFC, this particular stock is one of my top picks for today. If you look at the weekly structure, it has been holding well above that 2600, 2620 kind of a support zone. If you look at the daily performance, we saw a very strong rebound on Friday's session from that particular base at around 2630, and it has again tried to reconquer that trending 20 days exponential moving average, which was acting as a resistance. So we have seen a swing there. On the daily chart, it clearly exhibits a falling wedge formation, and falling wedge formation is a sign of a upcoming bottom. So that's why we believe that the stock may very well surpass that 2700, 2730 mark in the days forward, and that's why we are recommending building long positions here. The stop loss for the trade should be placed at around 2638 on a closing basis, and any declines towards 2650, I think that will be a good level wherein some longs could be committed when it comes to HDFC Limited.
Right, we're also getting some queries on some of these banking names. Nafees Khan wants to know your thoughts on ICICI Bank. Now, private banks were under pressure yesterday. ICICI Bank in particular is just about 30 odd rupees away from its 52-week high or thereabouts. Would you advise investors to buy into ICICI Bank on dips now?
So, Nandita, I think last month we saw this particular stock outperforming, and we saw ICICI Bank scaling towards 958 levels, and post that we have really not seen much of the action. It has been more of on the sideways line itself. Even here, the major trend still remains positive. We have some slippages below or towards that 900 mark, and this is where we believe that the stock could again find some support. So I think on a decline, definitely, this is a good addition from a trading perspective. Somewhere close to around 915, 905 would be an ideal level where the stock can be considered from a trading perspective. And the stop loss should be placed on a closing basis below 895 levels. On the higher side, we may not see an immediate breakout above the 950 mark, but definitely the reward to risk would be sweeter for a trade close to around 945. So on a declines up to 915 could be accumulated. 895 should be the stop loss, and 945 should be the point of review.
Right, that's the call on ICICI Bank. Let's talk about Indigo, Sacchitanand. Obviously this airline has been consistently gaining market share. In fact, now there's news that it has placed the biggest aircraft order in the history of aviation, 500 aircraft from Airbus, and this will of course be over the next decade or thereabouts. Order will be delivered between 2030 and 2035. How should one trade Indigo now? The stock has been flying high in an uptrend, up 17% over the last 6 months, if I'm not mistaken. Among other airlines like SpiceJet, would you advise Indigo on the charts? Any kind of new highs, possibility of new highs on this one?
Yes, Nandita, I think the stock is already quoting near its lifetime high zone. And if you look at the entire structure for the last almost 10 weeks, we have seen a very strong bull run in this particular counter. The base at 1900 was the critical base, and from that base, we have not seen any distortion when it comes to trend as well as momentum. Even right now, I think the structure is indicating that there is a good possibility that the stock could swing towards 2600, 2610. So that is the probable target that we have in our mind. And on the lower side, until unless we don't see it slipping below that 2340, 2320 kind of support zone, I think the entire structure still remains on the bullish side. So any declines towards 2400, 2350 should be utilized to create long positions. The stop loss should be placed on a closing basis below 2280, and the positional target remains intact at 2610.
Right, that's the call on the aviation pack, Interglobe Aviation in particular. But let's, we were talking about the HDFC twins. I also want to talk about HDFC AMC, given the fact that, there are sources suggesting that Aberdeen will be looking to sell entire 10.2% stake via block deal. And the selling price is likely around that 1800 to 1892 rupees per share, which is, of course, at a discount of around 0 to 4% or thereabouts. How should one trade HDFC AMC, given the fact that it has been in a downtrend of sorts, down 4% or thereabouts in the last 5 sessions, and on a 6-month basis also it has been pretty much lost somewhere around 16% or thereabouts. So how should one look at an HDFC AMC now?
Well, Nandita, I think the structure is still, quite sideways to negative. Even right now, the immediate major hurdle for the stock is to reconquer that 2020 mark, and until unless we don't see it closing and sustaining above it, every time the stock comes closer to its 200-day exponential moving average, there is some selling pressure which has been evident. Even right now, I think a sustainable close above that 2020 mark on a weekly closing basis could clear the trajectory towards 2200. But as of now, I think the trend looks a bit sideways. Probably we may see it again swinging back towards that 1800 base. So I think 1800 to 2000 is the range. And once we see a decisive range breakout on the higher side, then probably some momentum, longs can be chased. But as of now, I think it's better to wait for the decline and try to get into this particular counter near to its support.
Right. I think Baswaraj Bhima Reddy had a query on this stock, so I hope that query is answered. Let's take up some more queries then. There's a query coming in from Bhargavi on Balaji Amines. Now, this stock, I think, has made quite a good comeback, given the fact that over the last 6 months or thereabouts, it is on the losing side, but over the last 1 month or so, it has managed to stage a good comeback. Bhargavi wants to know what to expect on this counter going forward.
Well, Nandita, I think the stock made a life high somewhere close to around 5,200 in the month of September 2021, and post that, it has been on a corrective, trend. If you look at last few months, it has been showing some stable signs. I think 2050 has acted as a very good support zone. And on a weekly basis, what we are seeing is that the relative strength has already displayed a breakout. So probably, we may see the price action unfolding on the positive side. So I think it's a good idea to, start accumulating this particular counter from a portfolio perspective. The stop loss should be clearly placed at around 1980 on a weekly closing basis. And on the higher side, once it starts trending about 2500, 2630 kind of a zone, we may see a very strong comeback, in this particular counter. So keeping the trajectory open right up to 3,300, I think this is a good level wherein the stock can be entered from a portfolio basis. So I would recommend a buy and accumulate on this particular counter. 3,300, 3,340 could be the point of review, and on the lower side, 1980 should be the stop loss for the trade.
All right. Sacchitanand is, recommending a buy on this stock. Hope that answers your query. I also want to get your thoughts on IIFL Securities, Sacchitanand. There's been negative news flow. SEBI has banned the company from onboarding new clients for the next 2 years. Of course, this is in light of, alleged misuse of client funds that came to light in back in 2013, 2014. Of course, the company has said that, it does not impact its existing business with existing clients, and that it will be challenging this order in the Securities Appellate Tribunal as well. But if you look at the share price, yesterday it was up somewhere on 4%, close to 52-week highs now. But do you think now this stock will take a U-turn and maybe, slip lower from these levels?
Nandita, I think it's better to take a level-based trade. If you look at the price performance, it has been trending well with the market itself. But if you look at last few trading sessions, especially the RSI, which is the relative strength index, it has started showing some signs of divergence. But it is better to exit this particular counter in case the stock starts slipping below 66 support zone. So as of now, it's better not to chase momentum or build any fresh long positions here. There's a clear-cut divergence in place. But if you're holding any existing long positions, it's better to maintain a stop loss at 66. The moment this particular level is breached, we may see this stock again cooling off, and we may see it slipping further towards that 58, 59 kind of a base.
Right. Some queries coming in on the Pharma pack. Surendra Kumar, in fact, wants to know your thoughts on Lalpath Labs. And of course, Abhishek Krishna wants to know the short-term future of the pharma sector. If any stocks are looking attractive in this space, what would you advise investors to look at from the entire pharma basket now?
So as of now, when we look at pharma, Divi's Lab is one particular counter which has hit our radar. And if you look at the weekly, monthly structure, clearly, there are signs of a very large degree breakout from a falling wedge formation. The pattern was confirmed at around 3,400, 3,430, and we see this particular follow-through action to continue on the higher side. Though the major resistance for the stock from a long-term perspective is now resting somewhere close to around 43.50. Any declines in this particular counter should be utilized to create long positions. The stop loss should be placed at around 31.80 on a weekly closing basis. When it comes to Lalpath Labs, the momentum has been really strong. The weekly performance has displayed a breakout from 5 weeks of consolidation. Even on its 5 and 20 weekly crossover, it is indicating that this ongoing momentum should continue. So any declines towards 2100 during today's session, I think it will be again a good opportunity to add some trading longs. The stop loss should be placed at around 2060, and we may see this particular momentum getting continued for a couple of weeks, and the price target is placed somewhere close to around 2340.
Right, very quickly, one last query I want to squeeze in on Tata Steel. This one is coming in from Ashwati Uttara, and she wants to know your thoughts. Tata Steel, of course, has done extremely well over the last 5 sessions. It's up somewhere around 3 to 4% or thereabouts. Your call on this stock?
The trend has definitely improved. We have a buy recommendation on this particular stock. Any particular declines towards 110 should be utilized to add on to long positions. On an immediate basis, the short-term swings that we are seeing, there could be some resistance at around 116, 118. But eventually we see this particular counter, scaling towards 125, 130 zone. So from a positional perspective, any declines towards 110 would be a good opportunity. The structure is indicating that the price action on the positive side should continue, and the stop loss should be placed on a weekly closing basis below 105 for a potential price target of around 125.
Right. I think with that, we've come to the end of the query segment. What are your recommendations for today, Sacchitanand?
Nandita, two recommendations. One is HDFC Limited. The trade setup remains positive. We have already seen a healthy breakout from its falling wedge formation. The weekly 4 weeks consolidation now looks ready for a rebound. So we are expecting a price target of around 2,700 when it comes to futures, 2,700, 2,730 on the higher side. The stop loss should be placed at around 2638 on a closing basis. Any declines towards 2655 should be utilized to create long positions. The other stock on our radar has been LTI Mindtree. That has been consolidating here, but if you look at the weekly monthly structure, there is a long-term breakout in place. We're expecting this particular momentum to continue towards 50 to 50 on a positional basis, and that's why we are recommending longs with a stop loss at around 4990.
Well, those are recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Well, before I end the show, I just want to remind our viewers, Prime Minister Modi has left for a visit to the US from the 21st to 24th of the month. And ahead of his visit, we of course have seen gains, strong gains coming in on defense stocks, because during his visit, multiple defense deals will be on the radar. So watch out for some of these stocks, and of course, a lot of updates coming in from the visit to America. Well, with that, it's a wrap on this edition of Morning Trade. Thanks a lot for watching, but don't go anywhere, because coming up next is Opening Bell, so stay tuned.